Well, the market closed largely flat this truncated Diwali week, with the Nifty ending near the 25,800 mark. The Sensex closed to about 84,200. Earlier in the week, the market did see a big rise, and it came almost within striking distance of the previous all-time high. But then there were global tensions that dragged the sentiment slightly lower. This week marked the first time in 2025 that the market surged for a fourth straight week. So the bull streak is intact. The question is, can the bull surpass the previous peak and keep charging ahead? I'm Surabhi Upadhyay, and with me are editors Nimesh Shah and Nigel D'Souza. And to talk about all of these factors at play, we have with us Rajesh Kothari, Managing Director of Alf Accurate Advisors. Well, guys, it's actually only a 3-day week, right? But still feels long. Actually 4, because Murat was a trading session. So
it
therefore,
was working for a few of them.
Yeah, it was working for us. That's why 4 days.
Yeah, I think when you work on holiday, it looks like 1.5 day of work.
That's true. That's true. But Rajesh, season's greetings to you. Hope you had a great Diwali.
Wish you the same.
So the market's given us some reason to feel cheerful, right?
Yeah.
We're almost practically at all-time high levels.
Yeah.
But the question is, what from here? Is everything, all the good stuff already priced in? Or are we just about to see a breakout and, a further up move?
Well, I think I'm in camp of just breakout in. I think after a long time, we are going to see double engine growth. Just double engine sarkar. So this time, see, because if you look at the 2022 to 2024, the consumption was under pressure. And government did huge public capex. Now, I think from the next 2-3 years, you will see consumption to continue. And even the capex will continue. So consumption, which was hit very hard, it will revive from this quarter itself, in my view, because of the thanks to GST cut and income tax cut. And at the same time, credit growth is also going to revive. So credit growth, consumption, and capex. So all engines are going to be on fire. And the valuations are still, very comfortable across most of the sectors. So I think, we should continue to see the upward trend in the market.
Okay, all right. Let's just take stock of what went on in this week itself. We got into the week with some optimism. Last month itself, Mr. Trump and Mr. Modi, they had a phone call for the birthday. Then you had the Diwali wish as well. So the market was expecting, us to be all guns blazing. So it was a bit of an anti-climax actually that played out, because towards the end of the week, we ended more or less flattish with a mild positive bias, both on the Nifty as well as on the mid-cap index. So it appears, at least as of now, those all-time highs are very much due. But maybe, a few more sessions is what we'll have to wait for till we get some clarity on this trade deal front. And that's the one that people are looking at with regard to the animal spirits. But otherwise, it was a good week for various sectors. Reliance Industries, after a while, the stock was up more than 3%. It reacted positively to its numbers. It's gone through a bit of a correction. Metal stocks did well, particularly aluminium-based stocks, because globally itself, aluminium prices moved up. There's a bit of a deficit. And also commentary coming in from a big name like Alcoa. That's what spurred sentiment as well. So that stock as well did do well. And what a comeback coming in from the IT boys. People were ruling them out. But a big surge is what we saw. Infosys led the way. The promoters saying that they're not going to participate in the buyback. It could probably be because of the tax angle, but the street chose to look at it other ways and believe that valuations are in line, etc. So that index as well was one of the outperformers this week. Underperformers, there were a few actually. Eternal, quietly that stock has corrected more than 10% from the recent peak, from the post its numbers. And big boy Reliance Industries is talking about this, foray into the quick commerce space. That seems to be weighing on sentiment, and that's why that stock was down. ICICI Bank as well was an underperformer, while Ultratech Cement as well, they're looking at increasing capacity, but that stock as well was under some pressure. But the good news, I think, is what Rajesh said, right? Good results are being appreciated. The street is willing to look at individual stocks and say the number is good, we like to appreciate. There were a few stocks. EPAC, one of those newly listed company, that one did very well. EPAC prefab stock was up, I think, more than 25-30%. Remember, there's an IPO factor as well out here. There'll be some stock that will be locked in. You had Jain Resource as well that was up for the week, and you had Jaiswal Neko as well. Came out with a set of numbers, already rallied, but the street's appreciating good set of numbers. So I think heartening to see, right? Rajesh, any one result that stood out for you from what we have seen? A couple of names. You've had some of those positive earnings surprises as well. And earnings ultimately will drive the way.
Yeah, I think, you are absolutely right. So if you look at from the banking sector perspective, which is actually the biggest weight of Nifty.
Yes.
Yeah. And the top banks' results are already out. And that is very, very comforting. Because the most important is the NIM pressure, which everybody was expecting. The NIM is going to be under pressure. But both the large banks, they've actually surprised on the NIM. Yeah. And the asset quality still remains very solid. Yeah. So whether you look at HDFC Bank, whether you look at ICICI Bank, even Axis Bank has reported the numbers, and all three, which are the three large banks, their results are very, very encouraging. So I think the banking is one sector where, thanks to the liquidity by RBI, the NII growth, the NIM pressure probably is another 1 quarter, but after that, NIM pressure will come off. So your NII growth will come back to good double digit. And asset quality remains strong. So FY27, the big portion of the Nifty earnings growth will be driven by the banking and finance, which is 30% of Nifty.
Okay.
So how are you playing the banking sector? Through large cap banks or through the private or the smaller banks? Because in the smaller banks, suddenly you're seeing a lot of deals happening. So what's your take there?
So I think it's going to be a mix, because further what we do typically from the portfolio construction perspective, we divide across various segments. So for example, housing finance is one segment which we like the most.
Okay.
So we continue to hold their NBFCs, correct?
Okay.
Corporate bank is going to see revival because corporate credit growth is going to revive. So the 3 large banks deserves the attention, am I right? And then of course even MFI space is going to see turnaround from now, because that is the worst hit segment. And I think there might be 1 or 2 very interesting plays within MFI space. So you have to look at sector by sector, each segment you need to look at it and play selectively within bank.
Okay.
You cannot just play banking as a sector, but even within that you need to be the right selective, because then you can create much higher alpha.
Yeah, but it's phenomenal, right, Nimesh? The
Absolutely.
kind of deal flow that we've seen.
Yeah.
Yes Bank, Sammaan Capital, RBL, Federal today, and who knows, maybe it's still not over.
Nimesh says
It's
it's
still
more
not
store.
It's still not over, but just to put into context on the numbers as well, $7 billion is what the banking sector has seen in terms of M&A transactions only in this year. In this calendar year, not even this year, in this calendar year. So I'll start with Federal Bank. Today's announcement, Blackstone is putting in close to 6,200 crores. They're buying 9.9% via warrants. So that was one big deal. But the mother of all deal was RBL Bank. It was speculated for a very long time. Finally, it's official. 60%, a controlling stake is bought by NBD of Emirates. So that's again a big transaction. 26,000 crores is what NBD is putting into RBL Bank. So that's a big transaction. Sammaan Capital, you've seen a big reaction and a re-rating in Sammaan Capital as well. Even there, we've seen IHC now investing close to 41%. They've announced an open offer as well. So that's a big transaction there. Almost 8,500 crores is invested. So big transaction. Yes Bank, we all know. IDFC Bank was also a very interesting deal. Couple of private equity investors got into IDFC First Bank as well at around 60 rupees. They put in close to 9.9%. So big transactions. $7 billion is the amount. But as we all have been speculating, this is not. Maybe this is just a beginning. You may probably hear some more deals in the financial space in the weeks and months to come. So, Rajesh, we briefly spoke about private banks, NBFCs, but within these 5-6 names that I mentioned, anything that stands out after the deal is announced now, and most of them are getting capital for growth.
Yeah.
For instance, RBL Bank,
True.
They were not in trouble, no asset quality issues, just pure 28,000 crores will be available for growth. Similarly for Federal Bank, the ratios were quite strong, still they've raised money. Anything that stands out for you within these 5-6 names? I
think the biggest difference, if you look at 5 years back when the banking was really doing very well, and today when you are looking at these deals, most of these deals are between 1 time to 1.3 times price to book, which is not, in a way, it is not good. I mean, of course, there are positive side of it, but then there is a negative side of it, right? Because if you raise money at 3 times price to book, that's what people used to buy banks for, because the raw material is, getting the funding, am I right? So if you get it 3 times price to book, your ROE keeps going up.
Right.
Moment you dilute anything near to 1 time, your ROE will take very long time to improve. So of course, you get the credit line, which is huge, which is good. Your capital adequacy ratio will improve, which is definitely very good. But at the same time, for we as a shareholder, ultimately what we need ROE and ROA. And that ROE, we need to buy at right price to book.
Right, absolutely.
So if your dilution is very frequent and large at a suboptimal price to book, correct? Then it is okay-ish kind of thing from the real shareholders' value.
Correct. I guess that is why a lot of investors were a bit disappointed with RBL banks selling a controlling stake at close to 1 time price to book.
We had Sandeep Tandon on the show the other day, and he owns close to, I think, 6.5%, right, in the bank. And he said that he felt it should have been at a higher price.
Just because it was a controlling stake, so they never asked for a controlling premium. That was
So, but if you could just kind of complete that point, because from an investor standpoint, I have a choice. I can be with the clean big banks and steady growth, right? Your ICICI has an access of the world. Or should I be looking at some of these tier 2 names, NBFCs and banks? Because clearly the Japanese or Emirates NBD, all these, or the private equity guys, clearly they're seeing something. They're coming in at a very attractive valuation. Perhaps to ride the growth ahead. But you don't seem too convinced. So how should investors look at it?
I think we need to look at from the 2 different optics. One is look at from the investor who is investing. What is his ROE expectations? His cost of fund might be completely different. correct? Look at your cost of fund. For example, your cost of fund is 10-year GSEC, so 8%, 9%. For them, the cost of fund might be only 1.5%.
2%, 3%. Yeah.
So even if suppose they get 8% compounded annually, they might be happiest investor in the world.
Sure.
Whereas for us, our nominal GDP growth is 11.5%, correct? So we are looking for 15, 18, 20% compounding. So what has happened structurally, if you think through it, that so many banks have come in the industry. Earlier it was only top 5, top 6. Now there are so many banks, but they are not able to actually compete because the CASA is not moving up. Because if you want to have a CASA, you need to keep fixed deposit 150 bps higher. Then you can get tons of deposit, but then your NIM is gone. So the ROE is not coming through, correct? And therefore, if you look at the largest bank of this country, the most successful, one of our largest holding, like ICICI Bank, for example, please put a disclaimer. So look at the ROE, look at the ROA, am I right? At that size also, their growth is continuing. Correct? So when you have that kind of a tigers in your industry, as a small finance bank, they would really struggle a lot. And therefore, what generally we prefer is the large banks
Be with the big boys.
and unique NBFCs.
Okay.
So for example, if you look at Bajaj Finance, even at that size, they are able to grow at 20% plus with the strong ROE, strong ROA, and no such frequent dilutions. That's the beauty of the NBFCs. That's why you get the model, like if you look at the Chola or look at Bajaj Finance or you look at Shriram, this is the typical NBFCs who have a typical high ROE because they have created niche. Correct? So please put a disclaimer because we
So ICICI Bank is what you'll own in the banking names and in the NBFCs?
Bajaj Finance.
We own HDFC Bank, ICICI Bank.
We own the top 3 banks. We own Bajaj Finance, we own Chola. Chola has been our large holding for quite a long time. And we continue to own Shriram. So these are the very unique business models. Each of them is market leader. So we typically go for market leadership within banking.
Rajesh, just to conclude this financial part, any exposure to the gold finances, the Muthoos?
We have exited one of them. We are holding one of the largest gold finance, but I think that current levels, we think the valuations now are kind of, see, banking you need to be very selective in terms of the entry point and also the exit point. So I think the valuations are now gone up.
The largest one is what you'll had in terms of gold. So I think Muthoot went to around 3.2 times price to book. And
it is a little bit higher.
Had a great run.
A great run. I mean, IFL Finance is 1.6 and I think even the other one, Manappuram, is around 1.8 times. So, I get that.
Holding
Just one more point with regard to this banking, the kind of capital we are seeing. We debate about which bank it will be good for and which bank it won't be good, but it could be a big trigger for kickstarting the economy as well, because you're getting capital and then ultimately, that all is going to feed into the system as well. Credit growth will come about, if you have cheaper capital that's coming in, then these banks will be fully capitalized for the next couple of years, 2, 3, 4, 5 years as well, which will be very, very encouraging. All this capital that's coming in there, it'll help kickstart the economy. So the economic perspective as well.
Because it improves your capital adequacy.
Indeed.
So your ability to borrow now actually significantly goes up. So if you leverage, say, 5, 6, 7 times, correct? Then your ability to then improve ROE is now very high. But then you require that kind of a real, good borrowers who are willing to take that, because right now the corporate India is flushed with cash. And therefore corporate credit growth is kind of...
One of the themes you mentioned you like was also capex, right? I mean, that's another theme. And the last few years has been very good. The government has been doing the heavy lifting. As you said, we're waiting for the private capex actually to come about because that will be the real, the much needed punch.
Absolutely.
But from, if you have to break up capex themes, what do you like from there? What are you all playing?
So no major changes in portfolio. Like we continue to own the HVDC place.
The power equipment guys.
The power equipment guys, the HVDC guys, the pumps guys, the pump manufacturers, the players who are into DG-sets manufacturer, the largest DG-set player. So basically we are playing the new growth drivers. So for example, data center is the biggest capex. So who will benefit from data center? Correct? So there are top 2, 3 players will be the biggest beneficiary of data center. You are going to see significant capex on the modern railways like Tejas and Vande Bharat and all this stuff. Who will be the largest benefit, the largest supplier of transformer to those trains? Correct? Similarly for HVDC technology, because of the renewable, which will be the biggest beneficiary of HVDC. So then we have HVDC play. So likewise, we need to do again segmentation within the capex, and wherever the growth is going to be very large. So we are not playing roads, old railways, ports. No construction, no EPC.
On data centers, because that is the biggest sort of topic right now. You're playing that through large MNC companies who are involved in the technology, because I mean, these days, so many companies come out with press releases and some data center plans. Even real estate companies talk about just the land and infrastructure around the data center.
Absolutely.
But how are you playing it?
So basically, if you look at any data center cost, the 40% of it goes for electrification. And that electrification means transformers. So for example, like we have a holding, say, Hitachi Energy. Please put a disclaimer from quite some time. So Hitachi Energy is one of the largest player when you are talking about data center electrification. So there are only 3, 4 companies which can supply that transformer. So Hitachi is one of them.
Got it. So the enablers to the whole data center ecosystem.
Absolutely.
Got that point. We have to take a very quick break, but we want to talk consumer because you did mention that you like discretionary consumption as well.
Yeah.
And after the Diwali boost, I mean, then what parts of the market are looking exciting to Rajesh? We'll find out after the break. Welcome back. Here with us on Editors Roundtable, and this week we're discussing several themes and ideas with Rajesh Kothari of Alpha Accurate Advisors. He's told us that he does like some of the, capex plays like data centers, power transformers. He likes financials. He also likes discretionary consumption. And here's where it gets really interesting, Rajesh, because, you wonder this whole pop, the GST cut, and then Diwali, and then the whole bonanza. So we've seen what's happened, say, to the auto index, right?
Yeah.
The auto stocks have run up.
Yeah.
Some other parts of discretionary, these quick commerce plays. We've seen what Eternal has done from the lows as well.
Absolutely.
The question is this a lasting trend?
Yeah.
Or was this just a post-GST pop that will fizzle out? What do you think and what do you like in discretionary consumption?
So in discretionary, we look at multiple subcategories within that. So for example, automobile is one part of discretionary. Auto ancillary is second part of discretionary. Then you have a QSRs and the food kind of a category, which includes your Eternal and Swiggy's of the world. And then, of course, you have a retail play, a very large retail, apparel plays and luggage players, all those stuff. So we again need to be selective. So in auto, we prefer more auto ancillaries. Please remember, because of the GST cut, actually the car price and the premium two-wheeler prices, there you are going to see much bigger benefits, correct? Yeah. So I was just speaking with one of my friends, he said, when dad gives you money that, buy 1 crore Merc, correct? You are not going to say, I will buy now at 90 lakhs. No, you say, give me one more upgrade. Am I right? So that's how the premium segment works. Am I right?
Yeah.
So that means more margins. That means more profitability. And that's where the bigger juice lies. So the premiumization trend actually will accelerate further. That's the broad theme we are playing. So play premiumization, play SUVs or play the ancillaries, play airbags. Those are the players which are the biggest bet.
That's auto.
Play, for example, Bhujia's category, and I think that category is doing unorganized to organized is huge, very big trend. Unbranded to branded is a very big trend. So we continue to like that space. Luggage is an interesting space, so we are monitoring it closely. We are not owning. Earlier we used to own, but we are relooking at category. I think that category will again bounce back very strongly. There are new categories which are emerging, like for example CCTV cameras. That was not listed earlier. And 90% of it was imported. But now it is made in India. And now we have a listed play. So we bought it on the day of listing. The stock is about 40-50% from there. So we like that space. So there are many new themes are also emerging. One of the largest IPO, of course, happened some time back. So consumer durable. So, number of themes within consumer discretionary, I think, which will continue to do well.
You spoke about IPOs. You've been selective in the IPO market because not everything has done well. 1/4 of the IPOs are below the IPO price.
Yeah.
But some have done well as well. I believe you participated in LG. Anything else that you liked and you participated recently?
So we participated in one of the company which is into solar pumps. Okay. They are the EPC player of solar pumps.
Okay.
So just to give you a perspective, India has 11 crore farmers, but more than 50% of they don't have irrigation facilities. So solar pump is something very, very important for them.
Sure.
So government has a Kusum Yojana, and under that, Maharashtra is one of the largest state, and therefore we are playing a company which is into solar pump, which is into EPC of it, and ROC is very high. Typically, when you look at such companies, your ROC is very bad, your working capital cycles are very bad, your cash flows are very bad. But there is a unique company which is into EPC with a healthy ROC and no working capital issues, and reasonably strong operating cash flows. Sure. So, we bought that as anchor investors, and we continue to like that company. So, be very selective. As you rightly say, in IPO, you need to be very, very selective, Right. Probably only 10% of your IPOs are worth holding for a longer term. So, yes, you need to be selective on it.
So, Rajesh, brought up market question that, and this is a big if, right? Assuming that the India-US trade issue resolves at some point, next couple of weeks, right?
Yeah.
And we start getting this FII flow, which has been missing for the last now 12, 15 months. Now, the rest of this fiscal year, is it going to be a large cap market because we'll get that gush of foreign money coming in, so banks, large NBFCs?
Yeah.
Or will it continue to be a mid-cap market from here? So if someone wants to allocate capital, you've got 100 rupees to invest at these levels, index at all-time highs, how should you divide it between mid and large cap?
I think irrespective of whether it's a large or mid or small, buy company with a growth. Because there are many large caps which are going to offer you 5% growth only.
Correct.
So please don't get stuck into it.
Yeah.
Because otherwise your wealth will also grow at only 5%.
Correct.
So there is a common notion that I would like to buy large cap because of the very high safety and I will continue to get reasonable 12, 12, 15 taka. But
So for instance, banks, if I have money to invest,
Then
should it
it's
go to an ICICI, HDFC, SBI, be
Yeah.
safe and play there, or play in mid caps and small caps?
play both. Play right NBFC. Like for example, Muthoot had
Yeah.
made big money, am I right? Which is not a small. People think it is a mid cap, but actually it's the largest gold NBFC company, am I right? So you need to buy the right company and the right size. You buy the market leader irrespective of the market cap. So don't have that bias of the cap.
The mid and small and large.
Just look at the profit size of the companies and buy the large pool of profit size with growth. Now, if you buy the growth, that's where you will make money.
Absolutely.
And coming to your one observation, which even Nigel said, in fact, there is a recent even study, which is published by Bloomberg, that by not betting on whatever Trump has said, correct, they made 14% returns. That strategy has made 14% returns because there is only 28% probability that whatever he says comes true.
Actually comes.
Yeah, only 28%. And there is a very big study by Global
Trump
Fund.
always chickens out hope.
So don't worry too much about Trump.
Yeah.
It's okay. Markets will be volatile, but you can't help it.
That's what I was telling you about Gokul Das, right? You have to be very, very cautious because these trades are all over the place. Deal ho raha hai, deal nahi ho raha hai, and stocks go up and down. But I think some caution there is warranted.
I think we've gone on for long enough. We'll thank Rajesh and get into the weekend.
Absolutely. Thank you so much, Rajesh. Great
Thank you.
conversation as always. You enjoy your weekend and we look forward to the next one.
Wish you the same. Thank you.
Thank you. Thank you, Rajesh.
With that, it's curtains on this edition of Editors Roundtable. Many thanks for being with us. Stay tuned. News and updates continue on CNBC TV 18.